In this section, we're going to be covering what is Bitcoin and why is it becoming so important. The problem we're facing now can be summarized in the mentality of you only live once, or YOLO for fiat currencies, versus fear of missing out, or FOMO for cryptocurrencies. Now, cryptocurrencies are digital or virtual currencies that use cryptography for security, and Bitcoin has the necessary characteristics for currency. Bitcoin is the grandfather of all cryptocurrencies. It was the first original creation and today is the most established, most well-known, most trusted, and most valuable by market cap. Consider this as the gateway cryptocurrency. Just like the US dollar is for gold and oil trading, Bitcoin is the gateway cryptocurrency for cryptocurrency trading. If you want to buy another cryptocurrency or altcoin, you're more than likely to buy Bitcoin first and then convert it to another cryptocurrency. Now, you might remember this chart from earlier on. Well, there was a missing element. The question as to whether the currency could be a good store of value. And by currency, we're referring to fiat currencies. We discussed the evolution and concept of money earlier, so let's look at whether Bitcoin or cryptocurrencies can stand up to this definition. While cryptocurrencies could be used for a medium of exchange, the debate is around whether it could be used as a store of value. While Bitcoin has a limited number of coins, 21 million to be precise, that also meant that the value of the coin could go up in the near future. But if the value kept on going up instead of stabilizing, then you can't use it for a store of value. Imagine if you had one BTC or one Bitcoin and the price kept on going up every month. Would you use that Bitcoin? Think about my example of the Mont Blanc pen or my Rolex, both of which I might regret in the future if the Bitcoin reaches $1 million. So let's look at the individual elements of this and see if it is a good currency or good store of value or good exchange medium or, in short, good money. Bitcoin as a unit of account. If it has a number on it, it can be accounted for. It will have the same value no matter where you are, anywhere in the world. Now, as of the 16th of October, when I was recording this, one Bitcoin was equal to 5,690 dollars or 369,000 rupees, 4,000 euros, or 2,000 BD. Now, wherever you are in the world, it had a value, right? So you could exchange it for the local currency or the local fiat currency. Is Bitcoin divisible? The smallest unit of denomination for Bitcoin is Satoshi, named after the founder. One Satoshi is 1 by 100 million, or 0.000001. In other words, 100 million Satoshis is equal to 1 Bitcoin or 1 BTC. Now you probably noticed that the denomination is also given with the letters BTC. BTC is like using USD for US dollars or INR for rupee or BHD for Bahraini dinar, whatever currency you're using. Let's say you're using the euro, you would designate it in a 3-letter currency like EUR. Now, just like 100 cents is equal to $1 or 1,000 fils is equal to 1 dinar or 100 paise is equal to 1 rupee, or 10 million rupees is equal to 1 crore, at the end of the day, they're all denominations. There are practical difficulties, however, until mainstream adoption, and this is where I have a bit of a tiff with this. Imagine going into the store and saying, how much is that Coke? Oh, it's just 0.000003 BTC. I lost count. Anyhow, maybe just saying 3 Satoshis or 3 bits would probably suffice. But that's another story. Okay. Now, is Bitcoin portable? Well, wherever you go, you can take Bitcoin with you, whether on a piece of paper, via your device, irrespective of the amount. Even if you're a genius with photographic memory, you could probably memorize the numbers and you'd be okay to transfer the coins. But have you ever tried carrying around 1 kilo of gold? No? Try it one day. Is Bitcoin durable? Bitcoin can exist without borders. So long as the internet is running, the coin can be used. And even without the internet, it can be stored safely and securely. Now, recently, a lot of people asked me about, what happened in Puerto Rico. They didn't have the internet and electricity. Yes, those are disaster situations. But I'm sure that they couldn't even use gold completely. Some, I heard, were using cigarettes as a means of a currency. So we're back to the old days. But in the event that not every day is a disaster, you could still use the internet and still use electricity. And you could still use these currencies as well. Now, because it's not physical like cash, it can be transferred anywhere almost instantaneously. And this speed of transfer is one of the biggest advantages. The other thing is the triple ledger accounting or trustless system. Now, a trustless does not mean that there's no trust. It means that you don't require trust. In short, you don't require a third party to trust or any other intermediary. We can look at the blockchain and see what happened to our money. And the blockchain cannot be altered, or as some say, it's immutable. Now, is Bitcoin fungible? Well, fungible means interchangeable. 1 unit in my pocket is the same as 1 unit in your pocket. No matter who owns the coin, it can be used for the same purpose. Because Bitcoin has no geographical boundaries, it doesn't belong to one single country or state. So wherever you go, it's expected to retain the same value. Now, as a medium of exchange, well, we've seen that, and I think everyone is convinced about it. It can store a large amount of value in a small amount of area. Whether you have 1 Bitcoin or 1,000 Bitcoins, you can store it on your internet-connected device, on a piece of paper, or offline in a cold storage. And what about store of value? Well, this is the most debatable part. Now remember, Bitcoin has a finite or limited supply. There will only be 21 million Bitcoins. Now this is better than gold standard because we really don't know the potential supply of gold because there are undiscovered reserves. So the gold supply, effectively or technically speaking, could be increased over a period of time. Now this is good also for those living in countries where there's hyperinflation. For example, Argentina, Venezuela, Zimbabwe, these countries, they experienced hyperinflation and they could have had, if they had Bitcoin or they could have used Bitcoin, they'd be better off. Now, is inflation good? To a little extent, yes. But what happens when you have high inflation? You have to work harder to earn more money. Well, you may ask, why do things look cheaper then? Well, if it's looking cheaper for you, that's because your country is exporting inflation to another country. Now, as I said, this is the most debatable part. If there is no cap, or it's uncapped, or there's no supply, or definite supply, no known supply, there is a motivation to spend rather than save. For example, when we have negative interest rates, who would want to keep money in the bank? I mean, you'd rather invest it for positive returns or spend it. Now, spending is good, which is why inflation is also good to a certain extent. Markets exist because people spend money on goods and services, which ultimately lubricates the economy. But this also means that market prices will start to rise, and the faster they rise, the more people will be spending before it becomes expensive. Now, instead of using Bitcoin, people will be saving Bitcoins as a store of value. So ultimately, what I feel is that there is this debate or utility versus store of value, which I'll talk about later on. Now, this is an interesting graph, and I wanted to do a comparison here of dollar versus gold and think about it from Bitcoin point of view as well. If money should be a store of value, that is, it must retain or maintain its purchasing power over long periods of time. However, if you look at the US dollar, since 1913, when the Federal Reserve was created, the paper US dollar lost around 98% of its value. That's a lot. But we know that gold is not practical for business as well, which is why paper money was used and backed by gold. Even that had its limitations. You had to trust a third party to ensure that they would keep the gold to back up the notes and paper being issued, but then people were being a bit fudgy with the paper, and therefore no one knew really whether the paper contained that much of gold. Again, there's a problem with gold. You can't expand it like credit or create money that will be used in the future, which is why I think Bitcoin has a better potential than gold even. Now, here's a quiz for you. Write down your answer in the comment section. I'd love to hear what you think. Which of these is not like the other? Again, I'll ask you the question. Write down in the comment section, which of these is not like the other and why?